What's up guys, welcome back to my YouTube channel. Today I'm going to be showing you one model that I really like to trade with using prop firms and scalping 10-15 points every single day. I'm going to be showing you the rules for this model, and I'm going to be showing you every single trade you could have caught last week using this model also. So enjoy this video and make sure to smash that thumbs up. Step 1, you want to identify a fair value gap on the 15-minute time frame. As you can see right here, we have that 3-candle pattern that creates a fair value gap because the up wick of the first candle did not trade into the down wick of the third candle right here. So it created a fair value gap, and this gap is basically telling us who's in control in the market. Right here, since we created a bullish fair value gap, it means that the buyers are the one in control and that they're being aggressive. And what we can expect from this is a possible bounce here to create a new high. So we are going to use this fair value gap as a bias tool. So if we create a bullish fair value gap, we will remain bullish until this fair value gap gets disrespected. So if we create a 15-minute bullish fair value gap, we want to see price pull back into this gap, and then we're going to look for a possible trade. Step 2, you want to wait for price to enter inside of that 15-minute fair value gap by creating a bearish fair value gap on the way down. This fair value gap could be created on the 1-minute, 2-minute, or 3-minute chart. This fair value gap right here is telling you where the aggressive sellers are located in the market. Since you know you have a lot of chances of bouncing from this level right here, which is the 15-minute higher time frame fair value gap, and you can locate where sellers are in the market when they entered the bullish PD rate that should create a new high, then you have a scenario where there could be a lot of blood in the market and a lot of transaction happening because sellers are trying to push price down here below the gap, but buyers will try to absorb them to create a new high. Step 3, you want to wait for price to disrespect the bearish fair value gap that was created when you entered the bullish 15-minute gap, which will signal that there is a short squeeze in the market. All the sellers located inside of this fair value gap will get squeezed and will be forced to cover their position, which will drive price up to the most recent high here. Step 4, you enter at the close of the inversion fair value gap and target the most recent high for a 1-to-1 risk to reward ratio. Don't forget to put your stop loss below the most recent low right here, and don't put your stops to break even until you hit that 1-to-1 risk to reward. Here's an example of how your entry should look like. You will wait for price to enter the 15-minute fair value gap by creating a bearish fair value gap on the way down. And as soon as you create this fair value gap, the only thing you're waiting for is for price to close above this gap right here, so you can know that the sellers that were initiating that down move into the gap got squeezed, and they will be forced to cover the position by clicking on buy, which will drive price up really aggressively to the most recent high. So right here, you're only looking for price to close above this level right here, and as soon as it closes above it, you will go long, stop loss just below the most recent low, and you will target the most recent high for a 1-to-1 risk to reward ratio. Now let's go on a chart so I can show you exactly every single trade you could have caught last week using this model. So right here, it's Tuesday, February 18th, and if I scale down to the 15-minute chart, you can see right here that we have what we call a 15-minute bullish fair value gap. This is our step 1. We want to look for a 15-minute bullish fair value gap. What is this fair value gap telling me? It's telling me that there's a lot of passive buyers that are going to be standing inside of this key level and that are going to be pretty happy that price is going to go down here so they can buy price at this level since it's in a discount. What's really happening on the chart right here is that I know that there's going to be a lot of passive buyers that are going to be willing to buy price at this level right here. So since I know that this level on the 15-minute chart is most likely going to create a new high if we bounce off of it, then I only need to wait for price to enter this fair value gap aggressively by creating a bearish fair value gap. If I know that this zone right here, the 15-minute bullish fair value gap, has what it takes to create a new high and is powerful enough to create a new high and absorb all the aggressive sellers from pushing price down, if I can locate where the aggressive sellers are in the market when we entered this 15-minute bullish feeder array, I only need to wait for price to get above where the sellers are so I can know that the bullish participants are the one controlling the market and that the sellers are getting squeezed, so I have a nice opportunity to go long towards the most recent high. So right here, I'm waiting for price to tap that 15-minute fair value gap and create a nice 1, 2, or 3-minute fair value gap on the way down. So right here, we don't have it yet. And as soon as we tap it, then I wait for price to create a singular fair value gap on either the 1, 2, or 3 minute chart. What do I mean by a singular fair value gap? I mean a leg that has only one clear gap where we can locate where sellers are, and we can trust that the sellers are located in that time frame. So right here, we just entered that 15-minute gap. Right here, you see there's two gaps on the 1 minute chart. So I don't know where the sellers are actually located. Then let me go down to the 2 minute chart, and right here we have what I call a singular leg fair value gap. This singular leg fair value gap is telling me that the sellers are located between this candle's low and this candle's high right here. So then what is really happening is that we tapped this 15-minute fair value gap right here. And I know that there's a lot of passive buyers sitting on the bid that are willing to absorb price to create a new high. So then, since I know this information, I will then wait for price to disrespect the area where aggressive sellers try to push price down right here, so I know that the buyers are the one in control. So right here, I know sellers are located right here, and I'm bouncing from a Peter rate that has a lot of passive buyers in it. So then I'm only waiting for price to close above the zone so I can try to go long for a scalp. Right here is the exact moment I know that the sellers are getting squeezed. So this is where I go long. I put my stop loss just below this low right here, and I try to target the most recent high for a 1-to-1. The most recent high would be this high right here, and I would try to target it for a 1-to-1. Or you go long because you inversed that bearish fair value gap and you know that the sellers are getting squeezed, the buyers are being aggressive, and we absorbed all the sellers trying to push price down inside of that 15-minute POI. So right now, you know the order flow is bullish and we have a lot of chances of going back up for the most recent highs. And as you can see right here on this candle, you hit your 1-to-1 risk to reward ratio. So it took a few minutes, but right here, if I had to recap this trade again, we tapped a zone on the 15-minute, which we knew there was a lot of passive buyers sitting right here that were willing to buy price here. So then if we can see where the sellers that entered into that bullish zone are located and we can squeeze them, we have a nice opportunity to play the reversal. And this is exactly what happened, and we went long as soon as those sellers got squeezed here. Now let's take a look at a second scenario you could have got on the same day, few minutes after the entry. So right here we created a 15-minute bearish fair value gap right here. So what is this fair value gap telling me? It's telling me that there's a lot of passive sellers sitting on the ask right here that are going to be willing to sell the shares at this price level. So if I know that this zone could have the potential to create new lows, then if I can locate where buyers are when we enter into this bearish zone here, I can play the reversal if I squeeze all the buyers and the aggressive sellers are the one controlling the market. And I will have that confluence by looking at fair value gaps and what's getting respected, what's getting disrespected. So now let's go on the 1-minute chart and let's take a look at what price is doing when we enter into this fair value gap right here. So right here, we're going to wait for price to create a gap on the 1, 2, or 3-minute chart right here. So let's go on the 3-minute. Right here, you create a 3-minute fair value gap on the way up when you entered into that bearish zone here. So what can I expect from this leg? So what do I see? I know this zone right here holds a lot of passive sellers that are willing to sell the shares here because it's at a premium. Knowing this information, if I can locate where the aggressive buyers initiated that move and where the aggressive buyers could get possibly squeezed in the market, I have a nice possible reversal. So right here, with this leg that got created, I know that the buyers are located between this candle's low right here and this candle's high right here. So right after we tapped that 15-minute gap, we absorbed all of the buyers that try to push price up, and we squeezed all the aggressive buyers that initiated that up move. So right now, I know that I have a really nice short opportunity towards the most recent low for a 1-to-1 risk to reward ratio. So I put my stop loss right above this high right here, and I try to target the most recent low for a 1-to-1 risk to reward. So this is exactly where I go short. Stop loss above the high right here, and I try to target for a 1-to-1. So let's take a look at what's going to happen right after. As you can see, in a few minutes, you hit your target again. So we tapped that 15-minute bearish for value gap. We knew a lot of sellers were located inside of this zone. Now let's take a look at the third trade you could have caught on the same day right here. So you can see we have a nice low here, which acts as sell side liquidity. And if you look to your left, there is still the 15-minute bullish for value gap that is intact. If you can sweep this low and reject this level, it means that the aggressive buyers will be the one controlling the market, and that the passive buyers sitting on the bid absorbed all the aggressive sellers from pushing price down. So right here, what I'm going to do is I'm going to scale down to the 1-minute chart and wait for price to tap this level so I can see who's in control of the market when we enter this zone. So right here, we enter this zone pretty aggressively, and we create multiple gaps on the 1-minute chart right here. So then I can scale to the 2-minute chart to see if there's only one singular gap. Right here, there's one singular gap on the 2-minute. And let me see on the 3-minute if there's one also on the 3-minute. So right here, I will wait for price to close above the 3-minute fair value gap right here. And as soon as we're going to close above it, I will take a long position for a 1-to-1 risk to reward with my stop loss just below this low right here. So this is where I go long, and I will try to target the most recent high for a 1-to-1. And I hit my target in a few minutes. Again, same exact framework. I wait for price to tap a 15-minute fair value gap. This fair value gap is telling me that passive participants are located right here, and there's going to be blood in the market if aggressive sellers enter this zone and create a bearish fair value gap. Okay, why? Because if you expect bullish participants to step in exactly at this price level, and you can locate where sellers are by looking at bearish fair value gaps and how they react, then you have a nice squeeze. Basically what I'm saying to myself, we should respect the zone if we were truly bearish. So right here, when I see this bearish fair value gap, I ask myself, if we were truly bearish, we should respect this gap right here to create a new low. But if we are bullish and the buyers are the one in control and we have passive participants absorbing price right here, we will disrespect this gap and we will be driving to the most recent high most of the time. Now let's take a look at the fourth setup you could have caught this week, and it was on Wednesday, February 19th. So right here, you can see that there is a bearish 15-minute fair value gap, and this fair value gap will tell you that the sellers are the one controlling the market and they're the one being aggressive right now. So I see that there's buy side liquidity pool right here, and if we can sweep this buy side level and start to react from here, I know that the fair value gap is still active and the sellers are defending the position exactly inside of this gap. So right here, I will scale down to the 1-minute chart, and I will look at what price is going to do when we sweep that high and we react from this fair value gap right here. So right here, we sweep this internal high and we create a 2-minute fair value gap right here. Okay, if I go down to the 1-minute chart, you can see there's multiple gaps located inside of this leg. What do I actually want? I want a leg that has only one gap so I can locate where sellers are or buyers are in the market. In this case, it would be buyers because we want that bullish fair value gap to be disrespected. So right here, we tap a zone where we expect passive buyers to stand up and create a new low. Then if we can locate where aggressive buyers are in the market, then we can wait for them to get squeezed so we can go and play the reversal in the opposite direction. So right here, as you can see, we enter this 15-minute fair value gap by creating a leg that only has one fair value gap in it, and all the buyers are located between this candle's high, this candle's low right here. So then as soon as we deliver from that 15-minute bearish gap, I know the sellers are the one aggressive, the sellers are the one controlling the market. I will then go short, stop loss above this high, and I will target the most recent low for a 1-to-1. The most recent low is right here, but I will let it ride all the way to a 1-to-1 right here. Let's take a look at what is going to happen. And as you can see, in a few minutes, you hit your target. Take a look at another trade you could have caught on the same day, which was on Wednesday. You have an internal high right here and a 15-minute bearish fair value gap. If we want to recycle this gap, we need to see price getting above this high and deliver from that bearish PD array. And as soon as we create a bullish gap, when we enter this zone right here where we expect sellers to defend their position and absorb the aggressive buyers from pushing price up, we then will wait for the inversion or value gap right here, the inversion of that bullish gap, so we see that there is a squeeze in the market, so we can go for a one-to-one for the reversal. So right here, let's go down to the 1 minute chart and let's take a look at what price is going to do when we hit this level right here. So right here, we hit this level and you can see there's multiple gaps on the 1 minute chart. This is not what I want to see. I want to see a singular fair value gap, a leg that has only one fair value gap, so I can locate where sellers are in the market. So right here on the 1 minute chart, this is not the time frame that I want to look at. I then scale down to the 2 minute chart. Right here, there is two gaps right here. So there is one gap right here and one little small gap just below it. So this is again not a scenario where I want to trade this model. Then I want to scale to the 3 minute chart if there's a singular gap, and this is exactly what I get. You see, inside of this leg, we only have one fair value gap. We have a high, a low, and a higher high. But inside of this structure right here, from this to this low to this high, we only have one gap right here. And if we have one gap right here, and this we delivered from this low to this high to sweep the internal high and to tap into the 15-minute bearish fair value gap, this is the zone where I want to see the squeeze happen. So right here, I know that the buyers are located between this candle's low right here and this candle's high right here. Okay, so when we deliver from that 15-minute gap and I know the absorption was formed, okay, by rejecting this level, I then wait for price to inverse this gap, and I know that the buyers are getting squeezed, so I'm pretty happy. I'm waiting for price to close below this level, so I know that I have the confirmation that we inverse this gap. I then sell and try to go for a one-to-one for the most recent low. Let's take a look at what's going to happen. And in 9 minutes, you hit your target again. Let's take a look at the price action of Thursday, February 20th. So right here, you can see we have buy side liquidity pull, so a high, swing high right here, and there is a bearish 15-minute fair value gap just above it. So right here, again, what do we expect from this level? We know there's a lot of passive participants that are going to be willing to sell the shares at this level right here, which would create a new low in the market right here. So then what do you want to see? You want to see price enter into this bearish PD array, so bearish fair value gap, by creating a bullish fair value gap. Since we know there's going to be a lot of transactions happening right here, and we can expect the sellers to absorb price right here, if we know where the buyers are located, we can then wait for them to get squeezed, so we have the confirmation that the sellers are the one in control, and we have a nice reversal play towards the most recent low for a one-to-one. So right now, I'm going to wait again for the same exact model to happen. I will scale down to the 1 minute chart, and I will wait for price to tap this level and show me what it wants to do from there. So right here, what do we see? We see that we enter into this gap by creating a small bullish value gap. Okay, I know by looking at this price action that the buyers that initiated that up move towards an area where I expect sellers to hold and absorb price are right here, sitting between this candle's low and this candle's high right here. So if I know where the buyers that initiated that move are located, if I know they're going to get squeezed right here, if I can see that there's going to be an inversion right here of this fair value gap, I know that price is most likely going to go towards the most recent low if we close below this level. So right here, I will wait for price to close below this level right here, which will signal that the buyers are getting squeezed and that the sellers absorb price at this level and the aggressive sellers took over the market. So right here, as soon as this candle closes below this gap, I know I have a short opportunity for the reversal, stop loss just above this high, and target the most recent low for a one-to-one risk to reward. Let's take a look at what's going to happen from there. And as you can see, literally in 1 minute, we hit the target. Let's take a look at the last trade you could have caught that week, and it was on February 21st on Friday. Right here, as you can see, we have the creation of a 15-minute bearish fair value gap right here. Okay, what do I expect from this zone? I expect sellers to defend their position and absorb the aggressive buyers from pushing price up. So now we'll scale down to the 1-minute chart, and I will wait for price to tap this level aggressively by creating a bullish fair value gap, and I will wait for price to inverse the bullish fair value gap to then have a nice short opportunity. Now I just scaled down to the 1-minute chart. Let's take a look at what is going to happen when we hit this level right here. As you can see, we hit the level right there. And can I locate an area where there's a gap? On the 1-minute chart, I don't see a gap. On the 2-minute chart, I don't really see a gap either. I only see this right here, which could act as the buyers that created that move here, which could get squeezed. And if I go to the 3-minute chart, here is the gap. I'm looking for a singular gap on the 3-minute chart where I know the buyers are located between this candle's low, this candle's high right here. So if we can disrespect the area where the aggressive buyers initiated that up move towards a key level that is most likely going to absorb the aggressive buyers from pushing price up, then I know that the order flow is bearish and I have a nice short opportunity towards the most recent low. So right here on this down close candle, I will then go short, stop loss right above the most recent high, and I will target the most recent low for a 1-to-1 right here. And as you can see, again, in a few minutes, you hit your target. I thank you guys so much. Hopefully you guys enjoyed this video and learned something new today. Hit this like button, and also if you want to trade live with me, you can hit this link down below to join my free Discord. And also, if you're using a prop firm, please use Tradeify is the best prop firm in the world, code AMOS for the highest discount. Thank you guys so much. See you guys in the next one. Peace out.